Make sure I get that correct.
It looks like bloody CAD has spiked us out and then gone off to the races.
Hang on a second. Where's the zoom? Share the screen. Screen number 2. So what were you saying?
I'm just saying CAD has stopped me out and then gone off to the races, like stopped us out and then gone exactly where we wanted it to go.
Didn't you get out?
No, no, I've only just got back to my desk. I was out.
Well, you should have been out, matey. You've got
Uh,
retail sales.
yeah,
Announcement was out 1:30.
yeah,
So
that's what got me.
you should have closed CAD out, USD CAD and USD Japan. We can have a look, see if we can actually get back into them. But as you can see here, retail sales, up slightly. So that was 0.4. So that should put a bit of strength into the dollar. But the control group, which is retail sales plus food, was slightly down. So I'd imagine it's just going to be a quick zip up and down and nothing to get really excited about. But we can go and have a look at those. First of all, let's look at the Dow for the gap. So if we zoom down into the details, so what we're looking for is the gap close. So we've got the perfect gap, a perfect gap close potentially coming up. That's absolutely fatal when you say that, isn't it? The a gap close, that's good.
Usually.
Yeah. Oh, why did I say that? Why did I say it was a perfect close? I shouldn't have said that, should I? Right. Okay. Oh, I've not put the picture-in-picture thingy on, have I, for the share? Can anyone see me as a picture on the screen, or is it just
Yeah, I can see you, Steve, but I've also got a very small screen of your chart. I didn't know whether it was me, so I was trying to make it bigger.
No, it's me too. I'm the same.
All right.
what do you mean you're getting a small screen?
So you've
It's a,
gone. So now the chart is now probably only a third of the screen, and you're about a quarter of the screen. Your picture of you,
oh, right, okay, we're gonna
not
have to.
not where you're speaking side, but the other side.
Oh, I can see that is crazy. So share, let's share it some. Let's see if we can share something different. Um, how about if I change it to that?
Yeah, that's
Yeah,
okay.
that's better.
Your face is now over the screen, over the chart.
Is it in the wrong place, or is it
Yes,
all can
completely. Yeah, you need to get rid of the picture that's over. Your face is now over the chart.
oh, flipping heck. Let's have a look at sharing it again. I'm gonna take my picture off. Nobody wants to see me.
No, no, we don't mind seeing you, but it's just that you're on the chart.
Where am I else am I supposed to be? Right. Let's have another screen, my screen share, and let's see if we can do something else. We did have an update on Zoom actually, and it's done a fantastic update whereby I can't get. Can I make that even smaller? Well, how about that?
Well, it's smaller, but you're still on the screen. You're still on the chart.
Yeah, I'll leave it. Right. So I'll have to put up with myself on the screen. So what we're what we're looking for here, it's not setting off well, is it? Flipping it. Right. So what we're looking for now, we're looking at the Dow. We're looking at the ATR on the Dow is 69, ideal ATR 138. So let's get the measuring tool out and let's oh, that's Do you know what? That could look pretty good, that actually. Oh, we're losing people as well. So I think what we'll do, this is the spike, this is the noise, the information here on the retail sales spiking through. I think what we're going to do here is we're going to do an 86 and 86. Yeah, what I'm looking for here is the depth of this spike for the retail sales. It's only 73. We need to be below that for that spike. So what we're going to do is going to do 86 and 86. Well, the minimum 69, so we're well within the minimum. And statistically speaking, on a Friday, we have the lowest chance of closing the gap.
Oh, brilliant.
Yeah. But if it's a gap down, it's 8 out of 10. And I know, yes, yesterday all went really good, but do you know what? It's always the same when you're streaming live. So what I'm going to do here is look for this gap up, and we're going to do a 43,664, and we're looking for this gap to be closed up. Zoom out. So we're looking for the market to blast up past the retail sales announcement and see what we can actually do. Let's just have a look at the larger picture. Right. The market is completely oversold. We've got unbalanced volume, which is down. Participants, we don't know what orders are going to be placed in the market, of course, no idea at all. One thing I will say, I've done a Black Friday offer. I will put it in the links below after this stream. I think it's just for I've done it for the membership, for the room, but also for the fractal box as well. So 30% of everything between now and the end of November. Right, let's have a little look. We are completely overcooked, aren't we, here? So let's see where the Fibbo is. Let's see where the Fibbo is for the full day. So we'll just take a roughly Fibbo down here. We're at 61% Fibbo down into these levels. R3. Oh, we can see R3 here. It's quite an interesting level. Lot at R3. We've got a reversal point here. Yeah. R3 would be very interesting for a potential buy, actually. I'll just put a little note in here. This could be quite an interesting point here with the market coming off. Let's zoom right down now, so we can see where we are. This is the R3 and the previous reversal. Let's get this down into a little purple on here. Yeah, be quite interested in that. Oh, bugger off! Sorry about that. Market. I've got this wireless charger for the phone, and keeps deciding to disconnect itself and then reconnect itself constantly. So this is quite interesting. The market is positive. So we don't do a wall trade on CBOS. I'm not on the Dow. It's too spiky. But if the market does continue coming down, there's an obvious area down here between R3 and the previous starters, some resistance. That would be quite interesting to have a look at. But a gap up first would be nice as well. It's only 10 past, so let's go and have a look at Let's have a very fast look, see if Bitcoin's clicked in yet. Again. Oh, yes, yeah, we're at 300 pips in Bitcoin. So let's go back and look at let's go back and look at the USD. Right, so that was the US, so USD Japan, this was a spike that this is why we just, you always come out of the American markets on American news because you just never know what's going to happen. Even on retail sales, nothing to write home about, really, nothing big. But nevertheless, we do get spikes in the market. You can see we've just broken these levels here. Some previous resistance and fractal top here, down to this bottom here. The market's just pushed out here. Could be squeezing people out. We've got another bit of resistance here on the hour and a little bit here as well. So there's quite a few levels there. What can we do here with a next impulsive wave? Well, the problem we've got here, of course, is we've got a lower low. And trying to do an impulsive wave back up is not particularly accurate using these Fibo tools. So we'd have to go to a larger time frame, which I don't think is particularly clear. Right, yes, it is. Let's make some assumptions on the bottom 4 hour, and we'll pull it down to here. We'll take that Fibo. So kind of targets that we're looking for this morning were 15,682 on the Fibos and an extension on 15,757. That would be what we did this morning. So back down into 15-minute bar territory. So what we're looking for here is a 15-minute bar. Let's zoom out to the 1 hour. So we're not going to take any notice of this. It's 1 hour from 12 till 1. That was the rise and then the news. So, well, let's put a tool on here. Just, it's not a perfect figure because we've got some glitches in the system. I want to see the rough idea on the Fibos, the 61.8 and the 78.6. That's where the Fibo boys and girls will be heading for, so long as that bottom stays intact. But what we're looking for is a 15-minute pull-up. So looking for a 15-minute bar. Let's see if we can get into that again. So let's look at this. Right. Okay. Bear with me 1 minute. I'm just putting, just so I can see people's comments, if there were any comments on that connection. Right. Okay. All right. Hi, Dana. Long time since I've seen. Can't see you at all now, Steve. No problem. I'd crack on. Hi. Yeah. Probably best not seeing me. Right. Okay. So let's have a look. We're looking for a 15-minute bar on USD Japan. So let's get some alerts on that so we can see it. There we go. And we'll track the price being down here. I've just got an alert going off. Something that I provided earlier. Let's see where those alerts are. Always the same when you do an alert on a different screen, it goes off and you can't see which one it was. I'll put it onto a separate screen on the side. Take a little look. So 15-minute bar, what we're looking for here, the perfect, this is obviously before the news. People are getting out before the news, and that was the news bar. What we're looking for, the perfect storm bar would be either a 15-minute bar reversal, which is this current bar here, and that closes above the 9 EMA, that would be the perfect storm to be able to get into that and the break of that. Or if we're going to use a fractal, a clean break of that fractal. And we took a break of that fractal this morning and then got out the market before the news, so we don't get destroyed on any potential spikes. It could go your way, but it's gambling. You don't really want to gamble. Today on here, since we had that, the market response was a bit of a spike up. So I think I'll be quite happy. Let's move this a little bit higher with a 15-minute bar reversal. So that's a dollar basket now getting a wiggle on. So what we're looking for on here, US Japan, what we're looking for is a dollar basket. And what the dollar basket indication has just told me here is that Dixie, which is the dollar basket, is going to be going up. There we are. So we've got takeoff prior to the open. So USD CAD will be getting a wiggle on now. Strength on the Richter scale, US dollar from this morning being 2, it's now 5.7. The issue we've got trading the Japanese yen is that the yen 7 and still strong. But with the Dixie on its way back up, we should see a USD CAD, because the CAD's quite weak today at 3. We should see USD CAD taking off. Let's have a look at what's happened with the USD CAD. USD CAD, oh yes. So this morning we took a trade. Was it a break of here? 15-minute bar, a break of here. We stop under the swings. It's a shame we come out of that, because it would have been an absolute blast of a trade, wouldn't it? Yeah, 2% trade. Let's not dwell on that. I'm still in USD Japan on a different account.
So am I.
USD CAD. Sorry. So are you? You're still in Bridget here.
I'm still in Japan. I'm not. I didn't do CAD, so I didn't get knocked out, so I didn't do it. So
yeah, right. We're having a double top here on CAD, so I'm going to take some money into here. Everything on. It won't be a minute. Just closing a couple of trades off. I don't want to be caught while I'm talking with money on the table. There we go. Right, okay, fine. So USD CAD, USD CAD here. We want to be taking, we know that Dixie's going up in strength. We know this market has been on a storm for a while. Let's get rid of the targets. Those targets have all been smashed anyway. If you remember this morning when we're looking, it has broken out of the weekly high, which is here. And now we're interested in trading that right up into these levels, which I think I did mark in this morning, didn't I? For the headrooms. There's all the headroom spaces between the different spikes on the market. Now, to get into here, we want a 15-minute bar. So you can see here, mark this up here. We've got the area right up to here. We've just had a peek into here. So I would be very happy to take now what would I take on here? With the US market open, I'd be happy with a 5-minute fracker. So I just take these trades off, these marks off, I should say. So what we're really looking for here, you can see the headspace, the headroom that we've got. Watch out for big round number 14100. It's a shame I took it off from here. Never mind. So on here, this is a 5-minute fracker starting here with 16 pips plus the spread. That's a couple of pips. We could call that 19 pips. So we've got we have 19 and 24 here. So 1% risk, 19 pips, 24 pip target here. Now we're going to go for that. Do we want to go for that one? I'll tell you what, because we're going live, we're streaming live, we won't bother. We won't bother with that one. We will let the open happen, and then we'll come back and visit that. So we'll let the open happen and then revisit that one as well. And it looks like we've got a robot working as well on the FTSE. So, right, so what we're looking at here, we'll see what happens here. Ideally, we'll get a pullback, but rather than go in pre-market on the market open, well, sorry, there is no open and close market at 2:30. It's just the American market for trading indices, shares, and everything opens in about 9 minutes. So let's wait for that noise to abate before we jump into the market. USD, Japan, will you wait the same for that one as well? We're waiting for a 15-minute bar on that. I think if I was going to go for either of them, it's probably going to be the USD. USD CAD's looking the best. The Japanese yen is really, really strong after what they've done with housing, etc. overnight. And yeah, I'm looking at the heat wave currency strengths just at this moment. So let's go back 8 minutes to go. Let's go and look at that FTSE. Is it a bot that's on? I think I did switch to, yes, the bot is on. So we've got the fracker short bot on. So that's the code. Yeah, 15. Yeah, it's the fractal bot. So zoom out for here. Let's see where we are this morning. I've recorded the expiry back onto here. Get rid of this expiry. There we go. And ideally, I'd like to see the market come up a bit higher to be able to short it into the close today. We do have the 80, 8100 puts. What else? That's it until the market opens, really, so we can have a look at what's going on. Gold is trying to do a little recovery, and you know, we'll have a little look at gold when the market gets underway. But as far as trading is concerned on gold, it's kind of going sideways. If anything, it's a short target in 25.40, but we'll have a look at that in 6 minutes time. All right, quite a warm day today, actually. I was surprised. So there's a FTSE. So the FTSE, I don't know whether to switch this bot off, because if we do get a rise into the market, then it's going to pull this bot up. I think if we can see a bit of green there, I think I might close that one off. But I do want to short the FTSE, but we want to short that later on today. Right. Can I close that today? Can I close that? So, we'll close that one. Just take a little bit of money off that, some pocket change. And what I'd like to do is I'd like to see this market come up a lot higher. I'd like to see the Dow pull the market up. As you know, in the mornings, the FTSE generally rags the NASDAQ around, and NASDAQ follows FTSE action. In the afternoon, the FTSE gets heavily influenced by the movements of the Dow. Let's go and look at Dow. Where are we on the down? Is it going further down? It's almost tempting to try and run this from further down into that close. 138 pips would be a good run in there. I'm just thinking whether I want to trade that while we're above CBOS. Actually, I think we probably could get away with that. What time? We've got 4 minutes. I'm just looking at the unbalanced volume starting to build. And I think we'll keep the stop. And what we're going to do, we're going to run this down into these levels, into this area here, which has been important futures market break. So we're going to get a little bit lower on here. That'll do the job, 606. We've already got the 1% sat at 86 and we're below a Camarilla breakout short. So that is effectively the wall, but we don't use it for this. And we'll extend our profit targets on a here to 142. So we'll have 142 and 86 pips stop, potentially giving us a 1.65% return, 1 to 1.65 risk reward. So we'll do that on the down. So statistically speaking, Friday is the worst. But Friday is Friday 60% chance of a gap up, and a 79% chance of the gap going down. Friday is the lowest chance of a closing gap, but 86%, as you know, of the closing gaps on the Dow, if it closes, it's going to take within the first 4 hours. Markets, as you can see, a bit funny on American markets. These are all preemptive strikes before the market opens. What we kind of don't really want to do, but we've got, right, I'll refrain from my excitement. CBOS. We do not want the market to break CBOS. We've been triggered in now. We've got orders coming in, unbalanced order flows going up. The participants are getting excited as well, which reminds me, let's put the trade on the machine as well. So what we're going to do here is do that stop for 100 stop. And we're going to go for right, okay. We'll see where we get to with this. Right. You can see the orders, people are, you can see up and down the orders getting smashed up and down, up and down. Let's see what we get when it comes out the trap. We really do not want to see CBOS broken. Market is open. We want to see our orders placed on open to close this gap up here. Let's see what happens. We've got to go for it because it is with the trend. It's something we've got to go for. It's a system trade. The protection of the pivot is CBOS, but that doesn't necessarily mean that it's going to hold. But we've got a reasonable chance of that gap being closed. So let's watch this action now. You can see the orders really spike coming in now. Volumes coming in. Participants are increasing in the market. Doesn't mean anything yet. We just want to see a progressive move on. Hi, Pep. You just joined the crowd. Right. Come on, let's get a wiggle on. We have a closing gap from the 9th of November to close as well. On balance volume is nearly a straight line going on. Just trying to keep an eye on the other markets while this is happening. Keep an eye on that FTSE. Oh, right, thank you. Cheers. Thanks very much. So just a little bit of fizz just to stimulate the larynx. Right, come on, let's get a wiggle on. This is usually when the gap closes, it usually gets quite aggressive. And we've had an initial run up, and now we need a follow through. This first, let's get down to the 1 minute and show you. Got the impulsive wave. So we've got markets have only ever run into in two movements really, either go up or they go down. So just a reminder, this is an impulsive wave 1 because we are going with the trend. So the upward trajectory is impulsive wave 1. There's a 2. There's another wave 1. And what we're looking for here in a wave 2 back at the lower levels, what we're looking for are higher highs and higher lows. So we're looking, this is a impulsive 1, another impulsive 1, impulsive 2, 2. So what we're looking for really is this market to start building higher highs and higher lows. As soon as it starts breaking lower lows, then you know the market's in trouble. Not in trouble, but potentially coming back, return to sender. We really don't want that at all. And we certainly do not want Canberra breakout short to be broken. That's our pivot to hold for today. Let's zoom back out on the 5 minute. Sometimes doesn't do the constitution or emotions any good at all if you get down into the lower time frames, because as you see markets running up and down quickly, it does cause people a lot of angst with their emotions and gets people trigger happy, come in and out of the market, when really all we're looking at is a bit of price action up and down. The key thing they're going to watch out for are our pivots holding, and this is our pivot here, CBOS market. On the futures market, broke up through Canberra breakout short, then rested back on the pivot. It's come up a little bit and now it's come back down towards this pivot. So what we're really looking for on a bigger picture, great to look at the smaller picture, that's fantastic, but you need to always be cognizant of actually what's happening in your movements. So on the 5 minute scale from the futures market to the open market, we've got a higher low. Let's go out again But we'll zoom out, and you can see here now in the market we have a UK futures futures market on the Dow, punched down with the UK. It's tried to come up and it's dropped back down onto CBOS. We can draw a line there as well on here. What we're looking for is this market to hold. We're not the only people doing this, or people all over the world will be doing exactly the same thing. Everyone says you trade price action. You're not. You're trading everyone else's emotions at the moment. The result is prices move up and down. These are people's emotions on taking trades. So you can see at the moment, Heikin Ashi candle, it's an absolute split decision. The market's neither positive nor negative. But if you had to take a position at the moment, it would be positive because the Heikin Ashi candle is green. And we are trading above, you can see here. We're trading only slightly, but we were flat. 200 EMA on the 1 hour. And the overall trend, of course, on the 4 hour is, the trend is your friend, and the 4 hour is positive. So what we're looking for is trying to find a bottom on which to trade long from. The markets really hasn't demonstrated it at all. It's negative. And even if the market came down to the 42,800 levels, this is a 61.8% fibon, and the 200 EMA is there. It could easily be a bounce off here, and it would still not be negative, the market. So there's a lot to play for in here. What we're doing is trading the micro movements in the market, the holes in the market. So this is a cash market, timed on the UK from 2:30 till 9 o'clock in the evening. And what we need to be able to see, what the market needs to show, is that there's no holes in the market. So at the moment, what you've got is yesterday's close there. So during cash hours, there's the close, and there's the current price in cash hours at the moment. So at the moment, there's an effective hole in the market. In other words, no continuity from where the market left last night to the open today. So there's a hole, and that's a market inefficiency. So what we're trying to do is to find a way of getting into the market to close off that market inefficiency. And what you'll often find is the market, if it is going to close quite rapidly, it'll go up, it'll kiss the close, and then head back down. And if it's a very aggressive market, maybe it won't come down that much. I can't select that. It'll be a small little blip before the buyers then get a second steam and go through the close here. The market's been on a rip for a while, and what we're looking at here is the market overcooked? It's been running for all-time record highs. This is the daily channel that we've blipped out of. Is the market going to come back down? Could it come down to the middle of the market, which just so happens is round about the S3 level here? The market could easily come down to the midway point and then go back up. It could easily come down to the 61.8% fib. So what we're doing is looking at the resistance levels. We can see here the resistance here. We've got a point right here where the market has put in triple bottom here, and the market from the futures market, so close that off, has put in a back and grab hold of that bottom here. Highlights. This area here is pretty key. We need this to hold, and we've got our stop under Camarilla breakout short. It's a matter of waiting to see if the market makers are going to help push this market up and close the gap. You can see we've got some volume coming in on balance. So long as we're trading above the 9 EMA here on the on-balance volume, that's our data point. That's the indicator that I developed, the OBV9. Again, that's in the website. It will be in the links below as well on here once we finish. You can get this for Pro Real Time and for Trading View. At the moment, we're in the money by a few pips, but we can be out the money by a few pips very quickly as well with the Dow. But what we're trying to do is close this gap. So USD Japan is being triggered, USD CAD has been triggered. Let's have a look at these on a different machine. Different screen, I should say, not a different machine. And we are having that breakout now, which is a bit annoying. Discontinuation trades. Right. Quiet at the moment, we're just waiting for things to happen. And I'm just looking at putting USD Japan trade on at the moment. We'll see if this holds rather than flick around. But for the guys in the room, we've got nearly a nice 15-minute bar there. This 15-minute bar, guys, I don't know if I'm talking about the USD Japan. I know Bridget and Andy, you've been trading this. It's something for you to watch out for.
Yeah, I'm watching it.
Yeah. Nice strong bar. Flipping out, this Dow is taking an age today. Kind of one of the things I'm looking for is the Dow to close the gap, pull the market up. In other words, pull the FTSE up into some good levels. 80, 90, 80, 100s, if that's possible. And then let's get a short one into the close. But this market just cannot make its mind up. Even in the smaller areas here, you can see the mark. You can see here that this line has been respected. The market came back down and touched that line again. It's not willing to break it just at this juncture. So we are holding above Camera breakout short. It does need to get a wiggle on. Right. The issue we've got here, it's quite interesting. We stream live on YouTube. This is what a real trading room actually looks like. It's not all the excitement of doing the retro retro trades, so they all work. This is a real live trading and taking real life decisions. We either fall on our sword or we'll make our money. And the thing we've got to be is very consistent. We've got some strategies, we've got some rules, and we've got to apply them every time religiously. Know what our stop's going to be, know what our target's going to be, and then be patient. Wait for the market to come to you, wait for the market to develop. The strategies are based on statistics. Statistically, kind of this is the worst. So we've got a bull market, and we've got a close. So we're below the close. So a bull market expectations are the market is going to go up. However, the chances of the market going up today and closing the gap are significantly reduced compared to other days of the week. The best day is a Tuesday, and the second is a when Tuesday and Wednesday are very good for gap closes. Very good. The worst day is today. Maybe we should start live streaming on a Wednesday rather than a Friday. But let's see. Very, very much, very indecisive, the markets. The bulls are defending CBOS at the moment. Let's do a battle on that. Get down to the low levels. This is where your emotions will run wild. Look at that, the movement here. Absolutely big. All these pins here for people in YouTube are new. These are, we call them wicks. This is where the market is indecisive and it's rejecting a bull run, and a bear run is the red, and it's rejecting a bear run here. So what we're looking at here is when you see a red candle got a flat top here, it's where the market is immediately opened here, and there's no buys in the market. So that's just an alert for another trade. And the market's rushed all the way down here. As the market's come down here, people have took profits. So the market low has been here and it's come back up and closed here. So you can see people are sniping, going in and out, in and out. Now, sometimes we get a bit wild when we're doing some very small trades. You can actually trade quite easily on a 20-second ticker, but you can see the market's consolidating sideways in a very small time frame, rapidly up and down, up and down. We need to break out. The thing that's not looking good at smaller time frames is that we are actually coming to a bit of a formation here, a bit of a pendant formation, and yeah, we're getting a series of lower highs, but higher lows, quite interestingly. But let's see what happens. The thing is, what you got to do with trading is you've got to be strategy, you've got to be happy to use it. So you had to have back tested it. What the hit rate on here last week, we got 4 out of 5. This week, I didn't trade the gap yesterday, but I know the gap worked. The day before, it worked. I know 3 days this week it's worked. We're on the 5th day. Yesterday, I think it worked. Did anyone trade in the room? Did anyone trade the gap yesterday?
Yeah, I did, Steve. I had it yesterday. It worked.
Right. Okay.
No, I
Great.
didn't.
You didn't. You didn't trade it, Bridge.
I didn't trade it yesterday. No, I wasn't here.
All right. Okay. So we've had we've had 4 out of 5 winners. Again, the reason it wasn't potentially 5 out of 5 last week is because it didn't set up last Friday. The market just moved up and moved away from the gap. Hence the 9th of November gap. I think it was 9th of November. 9th of November. Right. Let's get out of the depths of the details. So into the 15-minute. Massive indecision. We want the C-boss to hold. That's what we're looking for. Let's put this on to 5 minutes and stop the flip-flopping around. Markets come in there. We're out of the trap on 5 minutes at the open, and you can see here, on balance, the market's up. On balance, it's up, and there are more and more participants. This looks to me, because what this spikiness coming in and out, these could be algo traders, high frequency trading bots going in and out very quickly. Because we are slowly developing on the market to the upside, but we are not getting any runs. And what we need is this as our oblique rising support and protection. That's what we're looking for. Statistically, we know that this gap does close very well. So there's no need to be excited about this, really. If it fails today, then it's won 4 days out of 5. And although you do not like to lose a trade, you cannot win them every single day. Although we've had 4 on the bands that have won. So it'd be nice, 5 from 5 today would be good, but it is really struggling at the moment to do anything. I presume the guys in the room are long on USD Japani.
Yeah.
Yeah, good. I don't want to start flicking around, so we'll just concentrate on this first, then move off from this. So yeah, USD Japani is long and in the money and out the money, flip-flopping around again. The market's looking for some direction today, but I look at it. The only thing that's not looking for any direction is the USD CAD, and it's on a stoner at the moment. Right, look at that again. C-boss has been tested. If we get stopped out of here, then what we'll do, we'll run on to the other trades, and where we'll use this oblique, we'll alert this oblique, and we can market fill order. Okay. So this is our protection. If this fails, we could see a follow through. And we're still looking for a gap close, a second attempt at a gap. Well, if this breaks, and what we'll do, we'll alert this oblique. So if the market comes down, and then tests this again, we look to close the gap. The gap is there, that hole has not been traded yet. So what I'm going to do now, this looks like we might get a knockout here. Potentially, it's not over until everyone stops singing. It's very close. There's a reason why we have the stops in where they are. Are we going to get took out, or is that going to hold? We'll see. Come on, do something. If this is just going to really drop off, then there we are, we dropped off. So we failed on that one, so that's a minus 1% on the Dow gap. So we've won 4, lost 1. So what we're going to do now is we're alerting this oblique. So if and when the market does come back up to here, we'll then be notified that the market's coming down, which is a shame, really. What I really wanted to happen is for the market to press the close and possibly a little bit higher to bring the FTSE up, to drag the FTSE up, because we want to short the FTSE. So that picture behind that, just I've got my side going. Right. So, massive indecision here. I switched the bot off. Hindsight's a really good thing. I love hindsight trading. Turn the bot off, it would have been well into the money. But I really wanted the market to be higher. So, yeah, we've got the put options. Did the guys in the room, did you take the puts? Anyone?
No.
No? No. So we took puts as a protection on the market, going short. We're not right. So the 8100 puts, we got those for 24, and they are 35 at the moment. So they're 150% up at the moment. And the 80 puts, well, we've got those for 24 and the 19 at the moment. So we've got the opportunity for both puts we've got the 8100 puts to extend the profit on those. And we're looking at a profit extension or getting into profit with 3 pips out at the 80s. So the quandary here is, do we put an order in now, ready for, so just this area here, you can see a 61.8% Fibonacci expansion and then an overtrade here. This was the view and the risk area that we identified on Monday for the market to come down. Just an overview on the FTSE. We want the FTSE to come up and we want to short it. The trend, there's a 4-hour 200 EMA. As we opened this morning, I always mark it like this, and you can see the trend. Although we've been pushing on, the market is weakening and weakening. So we are expecting the FTSE to fall off into the close. we've got some 880s. So what we're saying is the market, the puts, what we're saying is the market will close under 880. And we've got another put at 8100, saying it will close under here. Now, we have a high test up here. The issue we've got in front of us is that the Dow has got a closing gap. The Dow will drag the FTSE around. The issue we've got here is the Dow going to continue on a bit of a corrective move going down? And if it is, it will really help the FTSE come off. It really help the FTSE come off, targeting down towards CBOS level to there. If the Dow does come off, then it's going to weigh on the FTSE coming down. The other thing, I'll just pull this off to one side and bring it across on this screen. The other thing that we want to be aware of, it's like a picture-in-picture here, is 26% weighting in the FTSE is oil companies in the UK. So if oil is on its way down, that will help FTSE come down. Now, when you're looking at here, let's put this on an hour as well. Can you see a very similar action here on oil on the FTSE? Oil is pulling up. So what we can actually do, and I've said, to the traders in the room, what we can do is use, if the Dow is not going to be a contender for pulling the FTSE off, we'd like it to be a contender for pulling the FTSE down. So if we can get the Dow coming down, so what you've got to be as a trader, you've got to be nimble. You haven't got to get your mind set on what the market should do, because no matter what you think, the market is always right. You're not. The market is always right. The market is a reflection of a massive group of people. They are always right. That's the way to trade. So we can see here, we've got the Dow coming off slightly. Can I put another picture-in-picture in here? Can I? Well, it might get a little bit congested a bit here. So to put that there, if I pull something else across, and we'll convert the Gregs into the Dow. So, and we'll put this in the corner here so we can just see everything at once. A bit messy. Trading doesn't have to be eloquent. So long as you've got the data in front of you, the right sort of data you can see. So Dow is coming off. Quite clearly, Dow is coming off, which is going to pull the FTSE down. We have oil. Take oil down into 5 minutes. What I'm doing here, I'm trying to get a forward-looking indicator here. We already got the on-balance volume indicator on the FTSE here. Quite clearly, on-balance volume's coming down. The average true range is coming down, which means participants are getting less and less. What we want to see is a red Heikin Ashi candle appearing in oil, and we want to see this level broken and sustained. That means the FTSE, it's got no reason to stay up, no reason at all. We've got Dow coming down, got oil potentially turning. What you'll see is the FTSE starting to turn with these Goliath commodity here on oil and a massive indice on the Dow. Let's just bring this out and have a little look. As you know, it's not beyond the wit of man for the market to come down to 43,300 and below. Now we've broken these levels. You can see here. No reason for it to reverse. We've got some alerts at the lower levels. So at the lower levels, if the market decides, there's the hole in the market. If the market decides to come down, then who are we to get in front of it? So you can't get in front of these juggernauts, these big markets. You just get steamed over. So we'll take that off the route now. You can see we're indecision on oil. And if we look at oil, oil clearly is bearish. So zoom out to the 4-hour. This is the 4-hour. This is the 4-hour here, coming down. We are right in some consolidation and nothing is really happening. On the 1-hour, well, look at this. It's just going sideways, flip-flopping. Nothing's really happening. So let's take that and flip it onto a different screen. And that opens up the FTSE. So what's the FTSE going to do? This is the high test up here on the futures market, the American market, and oil. We can, if we want to just put a support resistance trade in, you can measure that. We've got 27 pips to the top of that, give or take. You need a 29 pip stop for that. And the potential targets are coming down to a 33. So you've got a one-to-one risk reward available there. So do we want to take that? Let's put the frackers on. We could probably have a look at these fractals. You can see the fractals here, 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 and above here. I'll switch them on, you can see. There we are. Now, let's do a bit of techo on the 5-minute. You can see we've got this line coming down, another line here, bit of a channel. Markets coming down. You could argue we're kind of in the middle of that 5-minute channel. You'd argue the point that the market really on here, you'd be looking really, two things you can do. You can wait for a fractal breakdown, which is under the daily high here, stop above here, or you can take a trade in here and put the stop under over the second fractal. I think what we'll do here is we'll use a fractal break. So the fractal is 62.7, spreads 1, so half pip break would be good on that. I think today, because it is aggressive, we are trading under the 9 EMA. So 62.5 would be where we'd enter. 62.5 there. And our stops would be the top of that fractal, 74.9, round up to 75 plus the spread, 76 plus 1 for double tap, 77. So if we are correct, that will hold. And that's 14.5 pip. So we're going to put 14.5 in there. And then we'll see where we get to there. So that's what we're looking for. And we can open this up. We can measure that on a one-to-one. The one-to-one would roughly be about here. There. And I'd want to take that down to the Fibbo again. So what we're really looking for here, round that again. We've got from a risk reward perspective, we've got 28.5 and we're looking at 14.5. So that gives us a 1.96% reward should we get this. Let's not include the money that we've already made this morning on other things and forget the puts at the moment. The live trades that we've done, we've just lost 1% on the Dow. If we get this, we'll make 1.96, which means we'll be up 0.96%. That's what we're talking about, playing the percentages. We've made 1.36 this morning on the FTSE already. We've got the puts in potentially in the money. 8100 is at 34 now. We bought it at 24. 88 usually bought for 24 at 17. So what we're looking for here is this market to put in progressive lower highs. That's what we're looking for and put our stop above this previous high here. And we're looking at this market to let go on the downside. And again, it's a waiting game. Waiting for this market to come up. So whilst we are waiting, we'll put an alert up here just in cases. You can watch, see how that fractal top holds, if it does. Save that view. Let's go back into the Forex markets. Wow. Hopefully you guys in the trading room traded that. I'm in that I'm in the market, which is doing quite nicely.
No, I was on JAP instead, so I was already in it. So
all right, you're already in it. Okay, fine, that's great.
well, I'm not now because I'm out now because I've got stopped.
Oh, you took the profit. You took the money. Right. That's fine. No problem. No problem.
Yeah, I didn't have the bandwidth to do it.
Oh, right. Okay. Yeah. Okay. So for people that don't understand what we're jibber-jabbering around, the bandwidth and everything, whilst we're in the trading room and using this, using our accounts while we're training or improving, let's say, practicing the strategies, etc., what we do is we restrict ourselves on an account. So that makes us only take the trades that we think are right, proper, and high probability. So we don't scattergun everything. And it teaches us as traders with a small account to manage the risk and manage the trades. So when you've only got a small amount of money, we're talking about 2K or so, is that really does help you improve as a trader. It helps you just take those valid trades. And if you try and take too many, you use all your margin up and you're not able to trade. And that's absolutely fine. You do not want to be putting lots of money into an account, taking every trade you can see, because if they all go wrong together, you can lose a lot of money. And we kind of have limits on the day. We don't really want to be, once we get to 3% loss on a day, if we ever get to 3% loss on a day, then we call it for the day. That might sound a very small amount of money to people watching, but 3% is a lot. We very rarely lose 3%, often lose 1 point something, sometimes 2. And we often, on the other side, make 1, 2, 3, 4, 5% a day. So we don't never limit the upside. We always limit the downside to fight another day. So we are on a massive impulsive move here on the USD CAD down because the Dixie has took off. Let's just have a look. Looking at that, the dollar basket has really took off. Yes, it has. And again, we've been stopped out on the FTSE. Oh, dear me. Let's have a look. We've been stopped out on the FTSE. So you can see here, we've been putting progressive lower highs here. But we're trading under the 9 EMA. We had a fractal, we had a great setup. Sometimes it just don't work. And we just got touched here on the spread, I think, by a look at it. So there's another -1%. And I think, guys, I might call, look around on gold. I might call this and we'll come back on later.
Yeah. And
see what's happening into the close on the FTSE, because quite clearly we've got that influence. Is the Dow coming back up? Let's just have a quick look.
Yeah, it is. Well, it was. It's probably going back down again now.
So Dixie, where's the Dow? Ah, yeah. The Dow rags the FTSE around. Is oil going up? Yeah, oil's gone up. So these are the influences on the FTSE that you've got to really be aware of. And you can see if oil goes against your trade on the FTSE and the Dow, really, you haven't got too much hope of having a successful trade. So I'm not going to hang around trying to revert trade and then follow a trade and follow another trade. As far as USD CAD's concerned, if we can get a pullback down into the 50th percentile, something like that, I know you've already taken your money, Bridget, but if we can get a pullback, again, we'll get in there. I'm trading that at the moment. I'm still in it, but I'm only 127 up, 140, 150 up, something like that, which is nothing really. So I'll let that run. It's got enough wiggle room. USD Japani. Right, USD Japan is on a bit of a reversal, wasn't it? So that would have been a really nice bar here.
Yeah.
A close on that. So that would have been a trade here. We didn't take the opportunity to trade that.
We did.
Did we?
Yeah, because you said to me, "Are you two in the room? Are you in Japani?" And
Oh, right. In my other accounts, yes.
I don't know, but I got stopped out, I think. Anyway, well, I did go in of my own accord, but yeah, I think I got stopped out. So
Oh, didn't so your stop wasn't below the swing low here?
well,
Right.
I think I was just touched. I think I was touched out.
Right. So if you took this trade, I'm sorry, I put it on 5 minutes. That's wrong. It should have been on 15 minutes. Sorry. So where's the 15 minutes? So the 15 minutes would have been here really. If you're looking at that bar was too big, but 15 minutes, that would have been the trade. But you can see the moment the market is flip-flopping around quite a bit, isn't it?
Yeah, that was the problem. I think either my stop wasn't big enough, or it just touched me out.
Right. So that would have been the trade. I'm in that trade. I'm in the US CAD trade also. And on this trade, I'm down 1,300 on the USD Japani. Conversely, I'm up 120 quid on the other one. It would be nice if it was flipped direction, but hey, that's trading for you.
Yeah.
And that's the way it goes.
I am against my earlier judgment. I have gone short in gold.
That was a trade we were looking at this morning, wasn't it? And I
Yeah,
was wanting
to be honest, again, that's flip-flopping around. But I still believe in that one. I think we're going short.
Yeah, well, once the market breaks here, then I'll be short also.
Mm-hmm.
We're coming down into this area, which is 25.32 to 25.29 area. We're a target of a real stretch target of 25.
I'm on a target of 37.
Yeah.
2537. Let's see what happens.
Right, yeah, okay, that's what I have as well. We are trading, we're still on the 4-hour way. The market is absolutely clearly negative. Absolutely remove a negative price action.
Yeah.
Slightly bullish at the moment with price action, but really, what we're looking at here, Well, we need a break of this bottom, don't we?
Yeah, yeah.
We
What do
need
we
a break
think of
of
the Dow
bottom.
now? Do you think we're moving it? Actually, let me go on the 15-minute. Oh no, it's still a big red
Miles away.
bar. Yeah.
I think if we can break back above Camarilla breakout short, then I think this gap will close. The issue is having the right risk reward to be able to do it.
Mm.
Yeah, it's no good risking more than 1% for a 1% gain. You need a 1-to-1 risk reward. If it sets up later, then yeah, that'd be nice, but it hasn't set up. I think what I will do, it's 3:20 UK now. I'm going to come on at, right, okay, well, okay. If this market comes up and challenges into the highs here, in fact, I'm going to put an order in here. I'm going to put an order into these shoulders here, the 84 with a 12 pip stop. If it comes up, we'll have it. If it doesn't, then we'll be back on again. I'm going to come back on at, if you guys want to join us, at 4 o'clock.
Okay. I might. What I might do. Oh no, it'll lock me out anyway, won't it?
And I'm going to take
I'll
this
try
down.
and get back for them. I'll try and get back for them.
I'll put this down to the daily pivot, see how far this one will actually run. We might not get tagged into it. It's just in case oil and the Dow does take us up. But I really would like to.
Oh, I'm in profit in gold.
Pardon?
I said I've just gone into profit in gold.
All right. Well, you didn't support resistance trade then.
Well, no, it's been in for a long time. It's just
Right,
beginning to go down now.
Right, yeah, I can see here. I'll probably join you when it comes down. If we get this bottom fractal, I'll probably
Yeah, I
join
was going to say it needs to break a bit more, really.
Yeah, it's 16 pips. I'll actually put that in as well before we go. 16 and 22 would be a very simple, get the market to come back down to an area it's already been to.
Yeah.
Quite easily into here. That would be absolutely fine. If it comes down there, we'll have some of that. We'll come back on at we'll come back in the normal trading room. There's no point in streaming again on YouTube, really, I don't think. And the guys that are in the room that are actually sat on YouTube, just to give you a heads up, and I don't know if you're still trucking, Pepe, but we'll be on in, I'll come on at 4 o'clock and we'll have a look to see if that FTSE is going to make that dive for the close. And if it does, then we'll give it a tap and let's see if we can get our money back, because
Yeah.
we've just been we had a slap in the face on the Dow for 1%, and the FTSE for 1%. We're up 1.36, so we're down 0.7. On the day, we're down 0.7%. We have the puts in the close that should get us our money back, but we want to trade it as well. So let's see what we can do. If we can get 1% out of gold, 1% out of the FTSE, then that would be fine. If there's anyone on YouTube who wants to come on, type in now. And if I see anyone type in, then we'll stream on YouTube again for the last half hour. If not, then guys, let's just go back to our normal trading room, normal morning link, and we'll open at 4, and we'll see if we can get gold down and the FTSE down. Possibly, the ideal situation is we'll get gold down, FTSE down, the market will reverse, and we'll get the Dow gap. That's utopia. you know what? You've always got to be optimistic. You've got to be
Yeah.
realistic, but also optimistic at the same time. That if the setups are there, take them. If they're not, then nothing you can do about it, really.
I have to say that the FTSE looks as though it's going to struggle to do anything upwards.
It is really struggling on the upside.
Yeah.
Really struggling on that upside. It would be nice if it can just tick up a little bit more and give it a bash down. Our 880 puts look like they're going to work, and the 8100 puts looks, you've got 8100 up here, but I don't think there's a hope in heck that the market's going to finish above 8100 or above 8080. So those puts are going to put us nice, pardon the pun, put us into nice profit, get an extra % on gold, that would be good, and hammer FTSE for a manual trade at 4 o'clock, and then let's see if gold can help us out as well, and then finish the day on a positive note, maybe 1%. We're 0.7% down at the moment, and it would be nice if we can.
Thank you, mate. Appreciate it.
All righty.
All right, I'm going to go. And
Cheers, Steve.
I'll be back on again at
See you at 4.
normal link, 4 o'clock.
Perfect. See you then.
Cheers, guys. Bye-bye.